Welcome folks. This will be a beginner level on ICT concepts. So there are a lot of strategies that one would use and be profitable. But since I met ICT concepts, these is not a strategy, they are concepts whereby you as a trader, you have to come up with your own rules, and you have to make the concepts, and time being the factor here, come together and can make something out of it. So I see most of the people trying to kind of like rebrand whatever ICT shared and taught us to trade with. Some people say it's hard for you as a trader to master the concepts and use them real time as price is moving. So today I'd like to share with you something that is would be of help to so many, and to show you that it's possible for us to do it and work ourselves through it and make something out of it. So this will be a beginner kind of a tutorial, whereby if it's the first time you getting into this video, and maybe you've never placed a trade, you don't know anything about trading, then I think this will be the best start for you. So if you are completely new to trading and you'd like to venture into trading, I wouldn't suggest for you to start with this video. I'll wish you to go to YouTube, go over to YouTube, on the search tab, you search ICT Mentorship 2022. This is where the journey begins, where you get in depth into what trading is. So we have this playlist of ICT. You just head over to search ICT Mentorship 2022, and then this is a channel, the Inner Circle Trader, whereby this is where you start. If you are a complete beginner, even if you're trading other strategies, or even you're into ICT but you've never really got into depth into how ICT concepts really work, he is a man who is supposed to get you going and get you started. So you go head over into his channel. There will be these you'll see something like this. Can't get to show you. So you see this video being being the first video. So this will be an introduction, ICT Mentorship 2022 introduction. So this is where you start. You can always skip this video, but if you are a complete beginner, you just start over there this will be your bread and butter every day for you to live on. And by the time you get into, there are 41 episodes, so it's like there are 40 of them, because the first one is just him talking to traders. So we can amount that to 40 videos. I normally say this for some people. They usually say ICT videos are quite long and he talks a lot, but I find that to be very helpful, because what he says, it's true. If you are a trader, you know what he says is true, and you being a trader and listening to whatever he's saying, you wouldn't need what people usually call it's escaping my head, the psychology part. You wouldn't need that from any book or any other mentor or any other person who is a trader but deals with psychology. You wouldn't need that. So it's a whole package by itself. If you study ICT mentorship 2022, and then when you're done with that, go over to there will be ICT mentorship 2023. So this will be, this is it. If you see this video, so that's it. So if you're done with that, you go to ICT mentorship 2023, which is this one has a lot of videos, which is, I think they are around 105 videos. So most people say that ICT is boring, ICT is this, ICT is that. But let me tell you something today. Nothing good comes easy. Nothing good comes easy. You have to work for it. And if you want to know why this market book the way they book, and be sure when they will book and why, then you gotta listen to whatever ICT is teaching. We as his students only polish on whatever he has already put out there, and we try to make other people understand the way we do it, the way we do understand the concept. So these are kind of like a beginner, but if you want to really get into the nitty-gritty of the trading ICT concepts, then you head over to YouTube, subscribe to the channel, and then take into consideration those teachings. So I wouldn't go to like the complete beginner. I'll do it as someone who is has heard about trading, has been in trading, maybe not profitable, not consistently profitable, but he's a trader. So this is Euro USD. Now, if you see these charts and you just see candles, then there is a missing piece that is missing from whatever you know about trading. So when I see this trade, this chart, I see nice price action whereby I see where I could have gone long, where I could have gone short, and so on and so forth. So if you're completely new to ICT, here we trade based on time and then price. So as you can see, these are a chart like the one that we used to draw in school, whereby we had the y-axis and the x-axis, whereby we had calibrations of whatever bid mostly they were numbers. So be it chemistry, be it mathematics, be it physics, we had charts whereby we plotted some lines and whatnot. So now time is the most important factor whenever you are trading. No one should tell you that it doesn't work on time, because it does. I've seen it, I've worked with it, it works on time. It is time and then price. If you understand that, that is kind of like half your problem solved. If you understand the concept of time, then you're good to go. Some people you show up today, then tomorrow you're not there. You come on Friday, then you see new on charts maybe on Thursday, and that's your trend. If you don't show up every day, you must train your mind. You must train your mind on how to see and interpret what price is about to do based on what it has done previously. So when you see to the left, for example, when we are here, right there, we don't know what's the fate to the right, but you already see what price has done to the left. So since we have this, it is highly and it is likely for us to see what price will do in the future. So none of us is always right in the market. None of us. Even if you hear the Goldman Sachs, the guys from the Wall Street, no one is ever right. No one. Not even ICT himself. No one is right. The market is always right. So we're all trying to be right in the market, but for us to be quite profitable and see these things quite often, we have to familiarize ourselves with the chart. The chart should be your friend anytime, any day. You should know, if I see this, I'm supposed to do this. If I see this, I'm supposed to sit on my hands and not do anything. So I'll be teaching today on time being the number one factor here. So this video is about time. It's for beginners, yes, but time doesn't know, any beginner doesn't know any person who has experience in trading. So time will always remain to be a factor. Now we have things we call the silver bullet window of time. Now for forex, it's quite different from futures. It's quite different for stocks and so on and so forth. So mostly, and most traders trade forex and indices and futures. So we have several number of silver bullets, whereby we have right before London Open, which we can mark as 2 to 5 New York local time. So if you are not set your trading view to New York, head over to bottom right, click on time, and then change whatever is your local time. to New York, which is UTC -5. This always changes. Like the previous 2 months, this was +4, I think. Yeah, -4, I think. Can't remember, but it always changes. But just set it to New York, so that it may be in alignment with the algorithm. So the algorithm operates on time. If you are a programmer, you know this. And time in programming is always a factor. Let's say you are trading. You're programming something that has a function that it must do a certain thing at a certain time. If a certain thing is true or false. So time being a factor, none of that will happen if the time is not right. It's basically the same thing as whatever is happening in the trading space. So the algorithm and you as a trader must see certain things align within that window of time for you to push a button, or for you to do something, or for you not to do something. Now, if you've set this to New York local time, and then now the silver bullet, the first silver bullet is always from 2 to 5. So this is from 2 to 5 a.m. New York local time. So not every day, but most of the days, something will always happen during that time, that window of time. And in order for you to know what's going to happen, is by you showing up every single day. If you don't show up every single day, if you don't backtest, if you don't read the tape, you'll never come into an understanding of what price does at that particular window of time. So you have to show up every day. Showing up every day is important. It's very, 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 very important. I personally, I listened and revisited all the videos from ICT mentorship, and he always insisted on time and reading the tape. So I was wondering, why is this guy insisting on the same thing over and over again? And then I came to realize that it was true, that if you show up every day, if you do the same thing every day, it's like you wake up in the morning. For those who are working, so you wake up in the morning, you prepare yourself, head over to work, and then whatever you do, maybe you're in an office whereby you sit there and all you do is maybe sign some checks or some documents, and then you call it a day. That's something that you're used to doing. If you're doing and you're doing it, that's what you normally do whenever you go to the office. So these charts, being in your office, you'll be doing the same thing. And what makes that be the best is by you showing up every day. Because if you have to be the best in whatever you're doing, you have to show up every day. For those who know about football, the players, they usually go to the field every day. Practice. When a match comes, they go, they are fit, they've practiced, they do their thing. The same thing with trading. You have to practice. Backtesting. I remember I used to study ICT concept during the day, and at night I'll backtest. On Sundays I'll backtest. I'll pretty much go until this is not a premium trading view. I literally move way back until it displays that I've exhausted the number of candles that I'm supposed to for this account. So yeah, that's it. You have to show up every day. Every single day you have to show up. If you don't show up every day, then none of these will be easy for you. So yeah, that's it. So we have these laws right here, and this being the 2 a.m. candle for Thursday, 7th of December 2023. These are quite relative. The way you frame some entries is by looking at where are we at and at what time. Time here is a factor. So the first thing, you open your chart and it's right before this. I have this indicator that indicates for me the sessions to London and in the New York session. So during the 2 to 5 window of time, that's the Kilzone for London Open. So that being so, whenever, let's say for instance, you opened up your chart, you don't know what is to the right. You only see what's to the left. Now the left will tell you what the right will be like. So at 2, there is a sharp drop. These are 15-minute chart. There is a sharp drop, taking out this low, that low. Yeah? Yes, those 2 lows. Takes that. Now, for the folks that are familiar with the ICT 2022 mentorship, if you see this on a 15-minute chart, you directly head over to a 1-minute chart whereby you want to see a shift in market structure, and then you could be entering inside a fair value gap or another block or a breaker block, whichever you feel like. So on a 15-minute chart, all we see is a wick that wicked below and then came and closed above there, and then this candle opened and continuously moved to the upside. So if you go to the 1-minute chart, this is Friday and Thursday. Yes. So this is the same thing. So let's talk about something here very quick. Now, this is the Asian range. We consolidated. Someone went long, will be down here, or here, or here, or here, or here, or here. They were anticipating for longs, since they've seen this being an area of support, as other strategies teach. So this being an area of support, they'll trust that if they go long inside this range and place their stop below these lows, they are safe. Now, if you are the owner of this asset, the Euro USD, you don't want many people to be profitable. No one should be profitable in this market. So whatever is happening is they'll try as much as possible to cut you short and then move in your favor. For you to come around and go around that, time has to be the best, has to be your best friend as a trader. So if you've seen this on a 1 minute chart, this line here, as you can see, this blue line, that line right there, that denotes the midnight opening price. So as you can see, we had candle close at 23.59. Then the next candle opened right there at midnight New York local time. So the algorithm will operate based on this time of the day. The midnight opening price should always be a factor whenever you're trading. So you mark that the opening, the actual opening, this candle closed down there, then this one opened, so that was the open, the midnight opening price. Extend that through using a line or whatever, or just write this level. So at 2, whereby we anticipate for a move, you don't have to have buyers, folks. There's no need for buyers. Buyers, it's good to have buyers, but it won't make you profitable. Sticking to a bias won't make you profitable, but time and price will always make you profitable. So as you can see, we had this sharp move to the downside. It was quite fast. Why? Because it's coming to take these guys out. Why we did do so? Because it wants to book higher prices, and they are not allowing these folks that went long here and placed their stop below these lows, because what the books teach is, if you are going long right here, put your stop loss, or here, put your stop loss to the recent swing low, which is that. And by doing so, they'll use that and the idea of trail stops and support and resistance. They'll use that against those. For you as a smart money trader, you should be going long below. So what do I mean? Their stop loss is your entry, is where you enter, and you're entering to the opposite side of the market. So if here we were above the midnight opening price, there was an aggressive move to the downside, taking out the sell side for the ones that had already gone long. Sharp move to the downside. Now you start framing your entries. It could be an aggressive trader, and you just enter into as this candle opens and start rallying higher. So it could be a buy right there, or you could wait for a shift in market structure and then enter into, place your limit into a fair value gap or another gap for you to go long. So there were two things that were happening here. This was a stop hunt for traders who had already placed their orders, and their stop loss was below these lows. They were swept right there. Now, as you can see, the market was in a range bound. What does that mean? Some traders usually place, let's say they place a buy limit right there, and then they place those things that if price triggers them and continues in their direction, then they will be profitable. Now, this is set for that. Trades them, puts them into the market and then reverses. Where will be their stop above? Comes, take their stop, and they're out. So for you as a trader, you should see this as a Judas. Don't chase price. These are Judas. And if you ever see price moving aggressively on in a certain direction, be very careful. That's a Judas. Don't chase it. Just wait. And if time aligns with whatever is happening to the left, then and only then is when you refrain for your entries. Now you could have gone long around here and anticipate for a run higher, taking out the buy side. Now, what is this? This is a breaker. Now, a breaker is, you see this low. We had this low, we had this high, and we had this low. Which this low went lower, even below these lows. That makes it a lower low. And this low is the one that was used to take out the sell side that was residing below. So there is no need, after this top hunt, there is no need for price wanting to come back down into this area again. It will reverse. So you have to wait for a high or a low to be taken, and then you are there going into the opposite direction based on time. Time is the number one factor here. So if we have this, the initial run, taking out the buy side, the sell side, then and only then, if time aligns, if you're within the ICT Kilzone or the ICT silver bullet, the only then is when you frame some entries. Other than that, you may trade, but mostly do it around this window of time. So we had this drop and then an aggressive move to the upside. So these, when you are down here, you know these are breaker. Why? Because we had a low, high, lower low. Took out all these lows, my sell side resides. When that happens, price doesn't need to come back here again. So you could be going long inside the breaker, even if it doesn't form the 2022 mentorship way of getting inside into a trade. So you could be going long anywhere in here, from down to this, there, around here. And if you are quite conservative, you wait for price to go above this high close, up close candle. So this is your breaker. This is your breaker block. This is where you go and extend that through the chart like this. So for instance, from high to low, and then extend that through like that. So when price comes above it, when it touches that, that is your entry. Where will your stop loss be? Below this. You see this candle right here. This is an order block. below that. So your stop should be below an order block, below a low that has already taken sell side. Why? Because price wouldn't come back inside the low, or taking out the low, so you could be going long inside there. But specifically for if you are trading a breaker as your entry and as your PDRA, these would have been your entry. So going short, going long there, and then your stop being there, and then anticipate for a run into an inefficiency or other highs, such as, let's say, these highs right here. So this could be your draw on liquidity, your initial draw on liquidity. So we have this inefficiency right there, so that could be your target, and anticipate for a run higher into the buy side. So that's it. It happens every single day. It may not happen on a particular asset that you're looking at that particular time, but it will happen every single day, regardless which day, what day. It will always happen that way. And it doesn't happen only when sell side or buy side has been taken. You could be trading inside of a higher time frame fair value gap, whereby it has come to make that imbalance or inefficiency efficient, and then leaves. When it leaves, then that price range of that inefficiency has been efficiently delivered, and price wouldn't come back to that again, maybe again later in the day. But when it does that around the window of time which we are talking about, which is 2 to 5, then that should be a trade that you can consider taking. On days whereby we have news embargoes, such as big news events such as NFP and CPI, those are days whereby you'll see a lot of range bond markets consolidation, and it might chop around until the news event is released. So on such days you have to be very careful on whatever you're trying to do or you're doing. So that being said, that's it for the London Open Kilzone. Now another window of time whereby you want to focus on your entries. Don't be a market slave. Don't be. You just have to wait for the right time, and then and only then is when you try and frame for some entries. So let's head over to a 15-minute chart. So, 15-minute chart. I show you the 7 to now. This was the 2 to 5 window of time. Now you have to go to 7, from 7 to 10 window of time. So those are the hours whereby you would like your setup to form. Now at 7 we had this run higher. These I'll tell you this now. If at all you're trading, you should have narrative of what the higher time frame look like. So as you can see, this box right here, this denotes the volume imbalance in a daily chart. So having that in mind, and we had this initial run to the upside, and then we have this move to the downside, and we did not trade inside the inefficiency, which is daily. We don't see it being inefficient right here, but we have this being inefficient. If let's head over to the daily chart. Over to the daily chart. So if you don't have the idea of what the daily chart looks like, so as you can see, we had a run to the downside, and then we had this. As you can see, the body of this candle and this candle, the opening price and the closing price don't match. As you can see, this was 7,985, and then the open of this was 7,894, which are not the same. So price wasn't, this gapped down, so price wasn't delivered in the right manner. So we had this inefficiency. So sorry, you must have narrative of what price is likely to do. So we had a sweep in the morning, the 2 a.m. silver bullet. You can see this was the low that was taken right there for the previous day. As you can see, this is Wednesday and this is Thursday. So we had a run, an initial run, which is a Judas swing to the downside, taking what? Sell side. And when that happens is when you frame your entries. So you can always mark the previous day's low and the previous day's high and anticipate. As you can see, we had this high right there taken, and then a sharp reverse, and the next day, which was on Friday, we saw price move to the downside, all the way down to the downside. So if you don't have insight and have narrative of the higher time frame, you'll be wrong most of the time. So you must have the higher time frame in alignment with whatever you're doing. So head over back to the 15-minute chart. So this gap is the volume imbalance. We call that a volume imbalance, whereby only the wicks cross each other, and we have the bodies not touching each other. That means that the closing price and the opening price had a difference. So and that happens at midnight. This is how that happens. So if you have that gap down at around midnight, then that becomes it. Now at 7 a.m. New York local time, we see an initial run. This run high did not trade inside the inefficiency, which is a volume imbalance. So there was a likelihood of price wanting to gravitate and trade inside and deliver into the imbalance. So at 7, this is why now you have to blend some things. We had these lows, we had this inefficiency, we had this low again. Now when we traded down, where are we going to a discount? What PDRS lies at discount, and as I said, these are price runs whereby price will never, wouldn't I don't want to say it will never, but it would not revisit this low and take it out. So when that happens, what PDRS lies, you see this dealing range, you can take your fib right there, enter to the low and the high. So now this is discount, this is premium, this dealing range. So now this low right there. So this is at deep discount. So what resides below, we had the lower end of the inefficiency, and then we had this wick. Now wicks are gaps, for the folk that don't know that. Wicks are gaps and you treat them as inefficiencies. The way we treat this is the way we treat a gap. So we have take this high, anchor it right there. So the midpoint of a week, it's likely for price wanting to trade into that because weeks are gaps. So if price comes down at what time? At around 7, below the midnight opening price right there, it doesn't need to go below this low. It only comes to a deep discount below the midnight opening price and trading inside the inefficiency. This is a 15-minute chart. Now if you go over to the 1-minute chart right there, let's go and do something there. So now, the reason why I say wicks are gaps, and this is purely taught by ICT. As you can see, this is the wick that we are talking about, the initial run for taking the sell side below at around 2. As you can see, we have an inefficiency. That is why I always say the higher time frame should be parent to your lower time frames. So we have this inefficiency right there, and we had this as an inversion fair value gap. We could have extended it through. So having that, price would likely want to visit that, and it does so at around, as you can see, we had these lows right there. They're quite relative. So price comes, takes them out at around 7. So at 7, we're trading into the midpoint of the week, and we came below the midpoint of, we came below the midnight opening price. So if that happens, and time is a good factor now because we're inside the New York Open Kilzone, is where you could now start framing for longs. So this, I see this as a Judas win, and this will be now they move to the upside. So now here we could have waited for, you see, the 2022 mentorship what do you call it, entry model to happen, whereby you wait for a shift in market structure and then wait for an imbalance, and then you could be going long inside the gap. So as you can see, this low got taken out right there in the market, right there. We had that taken, and then we had a very small imbalance right here, whereby we had that. So these could have been your entry, and your stop loss below this low. So price came, went up, shift in market structure there, entry, stop loss, and targeting the volume imbalance, the daily volume imbalance, whereby price wasn't efficiently delivered. So on Thursday we had news, we had this drop, and notice it took out this low, yes, but did not take this low. It didn't even go below the midnight opening price. Now when that happens, don't panic when you see this drop. It's only coming back to taking out trail stops and also revisiting the discount array, which you have these inefficiency right there, which where these run into the inefficiency, and then we had another run inside the inefficiency and taking out this low, this. So this was a stop hunt for traders not to profit from this run. It was our initial draw on liquidity. So when we had that right there, so our entry will be there. And our stop B, our stop will be below that low. When our target B, the entirety of this gap, because this is not an efficiency that is we like to be traded into and then a reverse. No, something that we trade into and efficiently deliver inside. So we had an 11-hour trade. So the risk was too small, as you can see. So what I just outlined there is enough to make you profitable. It is enough to get you funded. It is enough for you to stop your 9 to 5 job and be doing that every single day. I usually do that every single day. I send those signals to my Telegram group, which I do it for free. I teach for free and I do it for free. So if you don't understand any of these, feel free to ask. Feel free to comment down below, and I'll be sharing my Telegram very soon. First I have to verify that link in order for me to share an external link into my YouTube. So and as you notice, this high didn't take this high out, and then this was again a Judas to the downside, and then an aggressive move to the upside. So could be also going long in here because we're still within the silver bullet window of time. So this run, and then being a Judas, the news release, the drawn liquidity is still the volume imbalance, and we have that. nailed right there. So we could have also traded this. It's also within ICT silver bullet Kilzone. So but I won't touch on that. Another silver bullet window of time. Notice that this is the same day that I'm talking about. I have not gone through several days saying this happened on this day, this didn't happen on that day. So sorry, let's okay. So now go over to the 15-minute chart and I'll show you the PM session, whereby you have to take your trades. Now for the PM session, it is always a kind of a retracement, mostly it's kind of a retracement. So we had this previous day's high taken right there. So there will be a measure of retracement, maybe 20 to 30% of the daily range, the entire daily range. So the retracement is what you want to capitalize on. They are not always so big, but they usually happen. Now that I got taken out right there. Now what is the time? The PM session is usually 1:30 to right there, 1:30 to the close of the New York session. So if you head over to 1 minute chart, right there, notice we are doing this on one day. Plenty of setups within the same day. Now that is 1:30. I have 1:30 starting from that. We had already taken the buy side. Yes, we could be going short right here, no problem. But if you want to wait for time being your key element, whereby you have to wait for time, and then your target should be maybe these lows or the inefficiency, the daily inefficiency. This is the volume imbalance from the daily chart. So as you can see, price aggressively moved to the downside right there. So you have that inefficiency right there. So now this is at around 1343. Your shorts should be framed within that. Your stop should be below this order block. Now what's an order block? An order block is basically a change in the state of delivery. We had this run lower. As you can see, we have 1, 2, 3, 4, 5 candles which are down close candles, but we only have 2 which are up close candles. Now this is a change in the state of delivery for this price run, for this dealing range. So whenever you see something happening, it may be a down close candle in something like this one here. Like you see, if you extend it through, price died into the down close candle right there and then moved up. So it is always a change in the state of delivery. So price broke, swing low, taken, shift in market structures, your entry right there, and you have already taken the buy side, trading inside the order block right there. So this could be your entry and your stop above that. What could you be aiming for? This low, these lows, which were nailed, but it was made target way later in the day during the close, which happened right there. So if you had to take some entries there, this would have been your entry and your stop being above there, and anticipate for a run on liquidity to those lows. This was a 6-hour trade, and it was efficiently and delivered inside the efficiency. So that's it. So it's always price, it is always time and then price. Time comes first and then price, ever. I'll repeat this through the course of this YouTube channel, because I'll be dealing specifically with silver bullets, whereby I'm dealing with time. So my entries will always be based on New York local time, silver bullets. Yes, that will be it. And I guess that wraps for the day. I've showed you the 24-hour daily cycle of your trading, whereby you don't have to do these movements in and out. You only need one setup that makes you profitable and you're off. So in a day you could be having 1, 2, 3 trades, which are likely and highly profitable, and trades that have no pressure. You don't have to pressure yourself, because now you're inside a range, something like this. You don't know where the market is likely to go. You don't know where you've entered, why you entered the position. So you have to have narrative. Where is the market going? Why is it going there? And most of all, you must have time being your number one factor inside trading. So whenever you are taking a trade, take into consideration the time that you want to place a trade. So I'll repeat, you have 2 to 5 and 7 to 10, and then you have 1:30 to 4, which is 4:15, I guess, to the close. Let's say to the close of the New York, heading over to Asia. So that's it, folks. I guess you've learned something. You've learned something about time being the factor, time being one of the key elements that the algorithm trades on. If you only do that, you get funded, you get whatever you want inside trading. You won't overtrade, you won't do anything stupid, because you only have 3 entries in a day for you to place. You wouldn't be placing trades inside these inside the day, whereby you don't even know where price is or where price is likely to go. But if you have narrative, you could be trading such moves, no problem. But you must have narrative. The most important thing is not the entry. The most important thing is, where is price likely to go? Because if you know this is where price will go, that means you as a trader you know, and you couple it with time, then you always know when to enter, when not to enter, where not to, where to. So just show up every day. These things are easy, they're easy to learn. If you see them every day, every single day, just wait for something to happen for you to do something. Don't just do something because it feels like you're supposed to be doing something. Do something because something has happened, and it is what you'd like to see happen before you see it happen. So if you see that happen, go in aggressively, have your stop loss placed, have your entry, have your target, and then always remember to take partials, always remember to protect your account, go to break even, protect the account so that you can protect your mental capital, so that you don't drain yourself when the trade is playing out. If you are on break even and you've already taken some partials, that means that you are at peace. If you're taken out, you are at peace, you are at zero risk. So that's it, and until I talk to you next time, be safe.